Hello everyone, I'm Pratap here. Today is 23rd October 2023. So one update from my side. Next 2 weeks, you get the reports a little late in the night. So what I decided is probably by morning 4 o'clock or 5 o'clock Indian Standard Time, I will be publishing these reports because at present my work hours are during the night times. So I may not be available to generate the reports during the day hours or evening hours. So kindly bear with me. I'll make sure your reports will be available by 4 o'clock or 5 o'clock early morning. So before trading starts, you can quickly analyze the charts with the help of these reports. This is one update. And the second update is I'm going to send some reports. What I mean, some CSV files I need to publish, but I don't know how to provide them. So that is the reason why already we have one Telegram channel. I would like to publish in this channel. I will try to keep publish this link in the description, but I don't know. YouTube is supported to publish the external links, but I will try to put it in the description. In case if YouTube is not supporting, maybe you can note down this and you can access all the documents I am going to submit. They will be available to you. Let me tell you what are those documents. Actually, I decided to send you some documents based on one of the questions asked by the subscriber in today's training session. This question is, do volumes can be used in demand and supply zone price action? Is this theory dependent on the volume? I'm sure most of you might be telling, we will not use volumes, right? But that is a wrong answer. Volume plays the major role in supply and demand zone price action. But it is not the same as how we use volumes in indicators, that is in other technical analysis tools. We use volumes in a different way. Volumes plays the major role in supply and demand zone price action. Without volumes, how can we get institutional pending orders? So the decision we are taking is based on the volumes, whether institution is participating in that stock or not. That means we are taking the help of the volume to identify institution participation is there in that stock or not. That means volumes are used for selecting the stocks, not for selecting the trade. But in other technical analysis tools like indicators or other concepts, volumes will be used for selecting the trade, not for selecting the stock. There is a major difference. So we cannot use volume for identifying a zone or taking an entry in the zone, because we are not trading based on the volume. Volume indicates already consumed orders. But what we are looking for? We are looking for pending orders. Volume never tells you about the pending orders. Let me just give you a small example to get better clarification about the people who are thinking volumes are required. So this is a day candle. Assume it is having a high volume. Do you prefer this zone? What way you will justify? This zone is so powerful because this leg out is having high volume. What we want is not at the leg out. What we want is pending orders in the zone, not in the leg out. What happens if you look into this leg out candle, somewhere here there could have been a huge resistance from the sellers. Let me draw a line for your better understanding. Horizontal line. Say I have marked a line here. Look at this line. Assume exactly here sellers are keep on selling and buyers are keep on buying. What happens? Volume will keep on increasing. Buyers are keep on buying at this location. Sellers are keep on selling at this location. And finally demand might have exceeded the supply and there are no more sellers, and by end of the day it just went there and closed. But are we trading here or are we trading in the zone? We want pending orders in the zone. We don't want consumed orders. Volume indicates the consumed orders. But what we want pending orders. There is no mechanism tells you how many pending orders are there. There is a mechanism is available to identify there could be a possibility of having the pending orders. That is what demand and supply zone theory. There is a possibility of having institutional pending orders. But no theory tells you how many pending orders are there in that location. But what volume is telling you? It is talking about consumed orders. Volume might be helpful to you when you are using indicators. Why? Let me tell you. First of all, indicators are lagging. If you look into this example, the price came to this zone because there is a good supply at 75 minutes location. It pushed there is a good demand at 75 minutes location. It pushed the price up. Do your indicator gives a signal here? No, indicators are lagging. Maybe after 2 candles or 3 candles, they will generate the signal because market direction is changed. Indicators need some time to calculate. So today's candle is gone, and next day candle also indicator is using for calculating. And finally, in this particular candle, it has given a confirmation. Okay, now market direction is changed. Now this is the place you need to buy. And that day there is a huge fight between buyers and sellers. There is a huge fight. Because of the fight, so much of demand and so much of supply is consumed. What volume is telling you? All of a sudden, the chart shows in this candle there is a huge volume. And your indicator also suggested this is the place where you need to buy. And what happened on the next day? The prices went down. What is your stop loss? Any indicator you are using, it may not be telling you what is the stop loss. You have to depend on some other thing. Your indicator is one concept you are using. For stop loss, you are using another concept. You are trying to correlate completely two different concepts which are not related. And the second concept, if you are applying, it will tell you stop loss is somewhere here. Let me draw the line. Somewhere here it will tell you stop loss. Next day when prices went down, what happened? It hit your stop loss. This is how we are playing with the help of the indicators. I did a huge research on the indicators. Finally, I realized indicators should not be used for buying and selling. Their purpose is something different. But we are generating buy signals and sell signals. I developed so many things in the system. Look here. I'll show you. We have a RSI here. What RSI is telling? You have to use 14 days period. So, okay, RSI after crossing 30 figure, it will generate a signal. So by the time it reached this particular candle, the 30 level, the oversold level, the 30 oversold level is crossed, and it will immediately generate a buy signal here. But you want a stop loss. Is RSI is telling any stop loss? No. For that you depend on some other indicator. Maybe you choose ATR bands. But ATR bands is calculated by using 21 days per period. But your RSI is calculated based on 14 days period. How can you correlate two concepts which are not related at all? And whatever the bands it is generated, based on that you identify your exit point, your stop loss, and finally you keep this is the location, your stop loss somewhere here. Next day market is down, it hit your stop loss and you will exit. That means we are doing completely in a different way. But where we took our entry? We took our entry here. Here we took our entry. But where an indicator person is, the indicator expert is taking the entry, here he is taking the entry. And where we are keeping our stop loss, here we are keeping our stop loss. And where that indicator expert is keeping the stop loss, somewhere here he is keeping the stop loss. And you brought the share here and he sold here. Why indicator generated a signal at this location? Because that is the place indicators are lagging, and that is the place it realized. And as per the formula, the price crossed that particular indication level. Then it generated a buy signal. This is how we are doing trading by using indicators. And first of all, indicators usage itself is different. If you learn RSI, you say, okay, because I learned RSI, I can use RSI. Whichever the place it crosses 30, you will take. But you should use RSI only if the market is range based. That's why it is a momentum indicator. In sideways market only you have to use RSI. But how many people know this point? Everybody say, irrespective of the market, people say, okay, RSI, RSI, RSI. Because in sideways market, the levels are fixed. These momentum indicators, they work perfectly, like RSI, stochastic. They are all based on range based. If prices are moving in a specific ranges, then they work perfectly. Perfectly means at least in a better way they work. But if the market is a trending market, how can we use RSI? You have to use a trend-based indicators. But whether you use RSI in ranging market or whether you use MACD in trending market, finally they are lagging. Those indicators are lag. First of all, indicator is lagging. After few days only they react. Before that they verify the formula. They confirm and finally they say. If we have a luck, what we do? If you buy here, your indicator has given buy signal, you have a luck on that day, then see how market moved, you got extraordinary profit. And you say, my indicator is wow, amazing, we say. Even that is what I did 20 years back. I used to say, wow, when market is going. And when market is going against my expectation, there was a big question mark in my face. What happened to my indicator? And over a period of time, I realized at different markets we have to use indicators. Okay, somewhat I got better result, but even then, still they are lagging. There was a big concern for me for finding the stop loss, finding the target. No indicators will exactly tell you where to buy and where to sell. For that you need to dependent on some other indicators which are not related to the indicator that has given the buy signal. So one indicator will tell you where to buy, another indicator will tell you what is your stop loss, and another indicator will tell you what is your target. Is there any sense? And all these three indicators are totally non-related. Non-related things we are trying to correlate. Does it make any sense? That means they're all luck-based. If that particular point of time, for example, this is the time if something is suggested, one of your indicators, you are lucky because your stop loss never triggered, and that might have given you some target. You might have reached the target. Markets are dynamic. They are changing time to time. When they are changing time to time, only the price action clues only will help you. You cannot use every concept and mix them. So this is one point I would like to convey, but I already told you, even demand and supply zone is having dependency on the volume. But I said the volume, we are having dependency volume for selecting the stock. Volume tells us really institutional participation is there in that stock or not. But again I say, volume is not the right word. Some extent it is right, but if you think even deep, I will give you an example. One stock is having 20 lakhs volume and another stock is having only 1 lakh volume. Which is the good stock? The stock that is having 20 lakhs volume or the stock that is having 1 lakh volume? Most of the people say the stock that is having 20 lakhs volume is good stock because the volume is more. But that is not the case. The stock that is having 20 lakhs volume, its price is 10 rupees. So what is the overall trade value? It could be 2 crores. The stock that is having 1 lakh volume and its stock price is 10,000 rupees. So what is the trade value? 10,000 into 1 lakh, how much? 4 zeros you need to add for 1 lakh. So it is 100 crore worth. That means the traders are on that particular day, they traded with 100 crore worth. But on the other stock, even though the volume is more, only it is 1 crore worth is traded on that stock. So in which stock more money is pumped? The stock that is having less volume, more money is added into that stock. That's why you have to take a decision based on the total value of the trade instead of just blindly looking into the volume. If you look into MRF stock, what is the cost of the MRF? But you will be seeing only less volumes only compared to the other stocks. But if you look into the trade value, definitely it is above 100 crores or 75 crores or 50 crores. That's why you need to find the stocks that are having higher trade value. So I wrote some programs and I generated some Excel reports. Excel means CSV. CSV files we can open in Excel. So for finding the stocks, I scanned the entire NSE. So in my database, there are over 2000 stocks are there in NSE. So I have scanned on all the stocks and I generated 4 different reports. Stocks having over 25 crore volume. Stocks having 50 crores volume. That is average volume for the last 1 year. Daily average value. not yearly average or monthly average. A daily average value for the last 365 trading sessions, not 1 year, last 365 trading sessions. So the daily average should be more than 25 crores. I generated a report. More than 50 crores, I generated another report. More than 100 crores, I generated another report. And more than 200 crores, I generated another report. So total 4 Excel sheets I generated, and I will post them. So in this Telegram ID, so you can go to that Telegram, you can join there, and you can get the documents. And in this Telegram, it is only one-way communication. You cannot send the messages because I don't want some disturbance might be created, because mostly genuine people will be added, but we don't know sometimes. Some wrong people, they enter, they may try to disturb the people. That's why I don't want to see any disturbances in the group. That's why only one-way communication. Any important things or any important updates or any important documents I will be posting, which I cannot keep them in YouTube. Maybe YouTube does not allow certain, for example, if CSV file, that is you can open in Excel. So those files, if I want to post in YouTube, I don't know how to do that. YouTube is allowing only videos. So that's why I decided this could be one solution. So this is about volume versus supply demand zone price action. Hope you got clarity. I know some of you might have shocked first time when I said in supply and demand zone price action, volume is essential. Yes, it is essential, not for selecting the trade, but it is essential for selecting the stock. So you look into the Excel sheet having a I'm sorry for the delay. So I'm seeing, if you look into that Excel sheet having 200 crore volumes, average volume, yearly volumes, you see something around some 40 or 50 stocks in that list. That way you can screen your stocks. Those people who wants to go for intraday trading, if any of those stocks are not in, if any of those stocks are out of Nifty 50 or futures, still you can select them because they have very good volumes. You can select them for your intraday trading. See, always we need good volume stocks having good volumes. Liquidity should be high. If the liquidity is high, so our trade will be handled in much better way. When you want to buy, you get a seller. When you want to sell, you will get a buyer if liquidity is high. If the liquidity is not high, probably you have to wait a lot of time. By the time the price might be changing due to changes in the demand and supply. So that's why make use of those Excel sheets. And next point is about our trades from the previous report. Some interesting observations you can make. Couple of high liquidity zones are not supply zones, high liquidity demand zones. Couple of high liquidity demand zones are violated completely. But still we didn't get loss. You might be wondering how. Because I already told you earlier also, when a high liquidity demand zone or supply zone can be broken, how we can identify them. Exactly, those rules are executed today. The zones are violated as per the rules I explained earlier. So maybe some of you might not have attended that video. For any new people are listening, these videos also, this information is useful. That's why from time to time I will focus on these points. But today I have to give with clear examples I have to explain to make you understand. Before that, some more interesting points I have seen in Nifty. Look into this demand zone. This is a high liquidity demand zone. We have already seen few successful trades during the intraday by applying our strategies. In this demand zone, when it is violated on 4th, but below that there is a 75 minutes demand zone acted as a bear trap and again pushed the price. So finally, this zone is not violated. The status is changed as pierced, because we are not saying pierced zones are violated zones. The price should completely close outside this zone. That is what happened today. But earlier that didn't happen. Finally, price closed inside the zone. Because it closed inside the zone, it gave us one more entry at the lower time frame. Let me go to the 75 minutes. A successful trade. Here. That day we have seen during the intraday nearly 150 points profit it has given. When? On this day. That is last Thursday. It moved 150 points. This part we fine-tuned to a least risk level. Still we got the trade. We have discussed this trade on that day, on the next day. So what is the point I told you regarding the high liquidity zones? When they fail, if there are no more fresh zones in lower time frames, what is this demand zone? This is a daily high liquidity demand zone. But we are looking for lower time frame fresh zones inside this zone. If lower time frame fresh zones are there inside the high liquidity zone, most of the times, more than 90% of the times, they are working. That is what we have seen all these days. For the last 3-4 weeks, we have seen all successful trades. Only one trade is failed. Okay, finally, this is a tested zone. And within this zone, is there any fresh zone? No more fresh. That's why easily price passed into this. But it is already pierced. Even then, we took some additional. Generally, we don't look into pierced zones. So even then, we took some risk because it is an index. Still, we have seen a success in the trade. But now what happened when prices are coming back? Have we found any fresh zones inside this? No fresh zones. That's why easily price. That is the reason why we didn't take any additional risk within this zone, because we didn't find any fresh zones. Finally, it is violated and came to, even this 75 is also tested earlier. Earlier, this zone was used as a bear trap, and this could have been weakened. If institutions want, maybe they might have added some more into this. But finally, they didn't show interest. That is what I am thinking. But what happened just below 75, 125 minutes is there. Currently, it is holding the prices. But is it able to push the market tomorrow? We don't know that. But one point we have to observe here, our high liquidity zone, it was part of the weekly demand zone. This is the weekly demand zone. Now prices reached almost near to the distal line of the weekly demand zone. If tomorrow the prices go below this weekly zone, our weekly zone will be completely violated. So far in the recent time, we haven't seen any violation of the weekly demand zone. From here, that is from March onwards, we haven't seen any violation of the weekly. Prices were keep on moving. Even we have seen some disturbance in the market. Now there is a heavy supply in the market. Even then, weekly demand zone is not yet violated. Even today it is not yet violated. But tomorrow we don't know. If price goes below this, first time weekly demand is violated. Now weekly trend is will be changed to sideways after this weekly demand zone violation. At present, a weekly trend is uptrend, but daily trend is a downtrend. Currently, daily trend is down. So now, some important point you have to observe here. Today, a new supply zone is created. Drop, base, drop. Because these weekly zones are violated, let me remove. Even this one, let me remove. Previously I kept because the zone was not violated completely. It was only pierced. Now completely violated today. Even this 75 minutes, let me remove. Now this is the latest status. And let me remove this horizontal line. This horizontal line is required because there was a gap there. We have seen so many pending orders inside the gap. That is what we discussed a few days back. So now we got a supply zone, drop, base, drop. If tomorrow, if this weekly demand zone is broken, who will be the responsible for that? This newly created supply is the responsible. That means it gets a superpower. That superpower is part of our high liquidity zones. Our software identifies. Why I am saying it is superpower? Generally, daily zones are having the ability to violate another daily zone. But here, if the daily zone is responsible for violating a weekly zone, that is going to be amazing. That means next time, if weekly zone is violated, then only this discussion is applicable. We don't know what is going to happen tomorrow. I'm assuming in case if this weekly demand zone is violated, next time if prices get into this daily supply zone, you can blindly go for shorts. They have huge success. At least I can say 90% success rate will be there. If the price comes within few days, it gets the higher chances. I'm not saying 100% because no concept works 100% way. We are only giving probability. See, I'm saying blindly we can go. Blindly we can go means you have to fine tune. You have to minimize your risk. Whatever the money your risk, you have to accept the loss if the trade goes against you. You have to prepare that. But the reason why I'm saying blindly is chances they have higher success rate because this is going to be a high liquidity zone. So is it becoming a high liquidity zone because it is violating this weekly demand zone? No, not that point. There are other additional checks also added. All those concepts based on that, then it will be. See, if a zone is violating every weekly zone, and if you are making it as a high liquidity zones, then everything will be an excellent market. The scenario is not like that. Only in this situation, there are other parameters are there that software will be identifying. But in this scenario, because currently the trend also we have to calculate. Trend is also playing the major role. By considering all these points and few other several points, finally the software will identify this. If that happens, then I will try to show you. But do this zone is having any achievement so far? Zone achievement? No. If it violates this weekly supply zone. Here we have pivots, right? Look into the pivot. Need not be weekly zone. Within the daily time frame itself, we are seeing a pivot. The pivot indicates it's a low value of this swing. See, if you look into this swing, the swing low, this one. From here, price turns. So the swing lows and swing highs are called pivots. So this swing low will be broken. So it gets a zone achievement, violated opposing pivot, VOP. We call it as VOP, violated opposing pivot. So that achievement it gets. Apart from that, it gets a special achievement because it will be responsible for breaking. Instead of that, again, if prices go up and something happens here, then again, whatever we discussed, everything won't be valid at all. If mostly tomorrow means next trading session. If price goes below this and violates this weekly demand zone, then only this daily supply zone gets some special power. That's why keep, in case if the prices on the next trading session, if this zone is, weekly zone is violated, keep this supply zone in your watch list. Keep an eye on that. So currently we have two supply zones in the daily time frame. This is the top one. This is a counter trend trade setup supply zone, and this is the second one. So this is about some points. One important point I want to discuss about Nifty chart, which might be useful to you. And only two trades, actually three trades are executed today, and one trade is not yet reached into the demand zone. We have fine-tuned inside high liquidity zone. So price is not triggered, but two zones are violated completely, high liquidity zones. One is Bank of Baroda and another one is SBI, State Bank of India. First let me open Bank of Baroda. Look into this. Actually, it is not violated. It just kissed the digital line. Look into this zone low. Observe here when I place my mouse on the candle. Now observe what is the low? 194. And similarly, now you look into that low 194. Here low is 194. Here also low 194. That means it just kissed the digital line. And a small rejection. That is in the last minute of the trading session. Generally it happens. Any profit booking could have pushed the price. But this will be easily violated maybe in the next session unless a new demand is created inside. That possibility is also there, right? Okay, why I am saying, look into the lower time frame. Because it is already tested, we identified a deep inside one 70 minutes, 75 minutes demand zone. This could be our entry, right? It is a fresh zone. But still I am not saying it is a fresh zone. This is the beauty of top-down analysis. Why we always say top-down analysis is important. Now we are in 75 minutes. It looks like a fresh zone. But actually, I have some doubts about this zone. My leg-in is not clear. See the leg-in, this is also looks like a base candle, narrow range candle, a small candle. If that is the case, all these are all base candles. 1, 2, 3, 4, 5, 6, 7, 8, 9 base candles. Is the zone valid? No. In that case, easily this zone will be broken with 9 candles. But still, why I have drawn? Because I didn't have clarity. Just for reference purpose, I drawn, and I want to find any lower time frame, further lower time frame. Any zones are available for day trading point of view. That is what I have drawn. So let me go to the 15 minutes time frame. Now I identified a 15 minutes excellent draw base rally candle. Don't say it is a base candle because body is less. But see the gap here from here to here. The gap is an invisible body. Gap is always gives you invisible body. You can't see that body. Just assume from here there is a body is available. How much body from here to here? Because next day it opened with a gap. Of course there is a rejection, but gap is not filled. If gap is filled, the scenario would have been changed. From where you have to see? From the close. From yesterday's close and today open, if the gap is filled, then you cannot consider this as a rally candle. Because gap is not filled, we can consider this as a rally candle. So there is a zone. After that, the zone is tested and gave an excellent move. Very good move. These kind of invisible candles, they works very well. That is what I observed. Maybe institutions are trying to create such kind of zones so that our attention won't be on these zones. These concepts I will explain during our advanced training program. But meanwhile, keep an eye on this zone. Okay, what happened to this zone? Is it already tested? Yes, it is already tested. If it is already tested, this zone is invalid. Not only this zone, this entire 75 minutes also invalid because 75 minutes the reason is we don't have any other 75 minutes time frame. Inside that 75 minutes time frame, we don't have any other lower time frame zones. You may say this is a rally based rally. You may think like that. I'm not comfortable to accept this is a rally candle, but even then, you see, if you draw a zone, this is also tested. If you draw a zone, this is also tested. Tested by this, see, prices went up and again came back. A new zone. Again prices went up, again they tested. So, we didn't find any fresh zones inside this 75 minute zones. The 75 minute zone alone looks like a fresh zone. But if you really open in the lower time frame, that is what our top-down analysis. This is the real beauty of top-down analysis. We haven't identified any fresh zones. Because there is no fresh zone, we are deleting this, even we are deleting this 75 minutes. Do we have any other zones here? There is a lot of consolidation here. This area, this entire area. So it is not good to take any trades in this area when so much of consolidation taking place. So finally, even then, we didn't find any zones, proper zones here. Now what happened? Price will easily break this zone. That is what happened today. It went down, 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 down. Finally, at the end of the day, there could not be much order flow. That means order flow for supply. We got a small rejection here, but otherwise throughout the day, see how prices were moving. So this is what I explained earlier also not earlier, at least 2 or 3 times I explained. When a high liquidity zone can fail with the topic name I explained earlier once. Not once, twice or thrice. So this is about Bank of Baroda. Even though high liquidity zone is broken, we don't have any option to take a trade in this because we never found a fresh zone in the lower time frames inside this high liquidity. Remember, always we have to find fresh zones. That's why top-down analysis is very important. And next we will see State Bank of India. Look into the State Bank of India. It already gave one test. Excellent move from there. So it never returned after that. But see the first time how deep the prices went inside. Just before, maybe few paisa before this distal line, prices turned up. But gave a very good move after that. It has given a very good return for short term or long term. It has given maybe medium term, not long term, medium term. It has given a very good result from August 23 to September 18. If you would have holded for a month, you would have got a very good return. But okay, here that is not our interest. Our interest is this move created any new fresh 75 minutes? If not 75 minutes, 15 minutes. Is it created? No. Just one single candle it went. What about 15 minutes? 15 minutes also? No. So that means this high liquidity demand zone is not having any fresh zones at 75 minutes level or 15 minutes level. 75 minutes level, if there is a fresh zone, at least we would have planned for a short term trading or day trading. If it is a 15 minutes fresh level is there, you would have planned for a day trade. But nothing is there. When nothing is there, what will happen to this zone? Easily it will break. See how easily the prices went today? No resistance at all for these candles. Maybe here it looks some rejection at this point, but it could have been some new orders. Somebody might have placed some new orders here. Some people like us. That order flow might have given some rejection. So how long? If there is no strong order flow, how long it will resist? Immediately broken. Then see how fast the zone is broken. That too in last 1 hour, the zone is broken. No demand at all in this zone. So that is clearly indicated here. This candle has clearly indicated us. It already consumed all these orders here. So that is the reason why we didn't get trades in these two stocks. If you would have got a trade, we don't know. If it is broken, our stop loss would have been triggered today. Or if the zone might have resisted and pushed the price for some extent, maybe we would have got a successful trade with some day trading target. So these are the 2 points you should always observe when you are trading with high liquidity zones. You should not forget high liquidity zones are already tested zones. Of course, there could be fresh zones also will be there, but already tested zones. The rule is lower time frame, we should find a deep entry or a fresh 75 minutes zones. If you find a fresh 75 minutes zones, at least short term trading or day trading, you get a successful trade. That is what we have seen all these days. For the last 3 weeks, we have seen only one failure. We have seen more than 20 plus successful trades. That one failure trade also happened, I think, almost 2.5 weeks before. For the last 2.5 weeks, we haven't seen any failure in the high liquidity trades which triggered. There are many missing trades. Okay, missing trade means the price didn't enter into the zone. That is a different scenario. The trades that are entered into our fine-tuned demand zone area or supply zone area in the lower time frames, they all gave good success. They all gave good returns. Many of the trades we got our average daily return, that is 6.1%. Few trades have given a little below this. One or two trades has given around some 2.5% level or 3% level. Good number of trades gave at 5%, 6.5%, 7%. All these things we discussed. In all these days, for the last 3 weeks, continuously, maybe few days, maybe I was busy and I couldn't analyze, but almost majority of the days, every day I was analyzing the previous days. And today, we narrowly missed one short trade. Otherwise, we would have got a very good profit. It didn't reach our entry, that is Balkrishna Industries. This is Balkrishna Industries. It is a short trade. See here today. Just missed this. Otherwise, we would have got an entry. Intraday, we would have got a very good profit during the intraday. See how deep it went, and again it turned up. That is a different question. But during the morning hour itself, it went up to this point. But I want to show you something. We always first look for 75. See here. It is 15 minutes, right? Okay, somebody might have thought in this rejection, okay, it hit the stop loss, but stop loss buffer would have saved you this. You might be thinking we would have got a very good profit here. Because the price already happened, we will think like that. But the reality, do we take a 15-minute trade just like that for already tested zones? Already tested zones, we look for a deep entry. Or you look for a fresh 75 minutes. Inside 75 minutes, you will fine tune. But is there any 75 minutes here? Directly you are taking 15 minutes. You cannot take 15 minutes directly near the zone for already tested. See how easily it is violated today, this candle. If you find any 75 minutes in this location, we didn't find. If you look into 75 minutes chart, we didn't find any proper 75 minutes supply here. Because all these candles are, you have a, this is a legging, you have base, 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 and your zone would have been like this. It's a high risky. When you have in the already tested zones, if you have such kind of high risky near the zone, it's not good. That's why we should always go for a deep entry. Maybe tomorrow if prices reaches, definitely we get a success in this trade. Anyway, I didn't feel this is a valid because the candle, some of these candles also looking like a very high range. Okay, you may say we can consider this because this is a ERC candle. So we can consider something like this. See, it reached and we would have got a intraday trade. But it's not a, I'm not convinced with this kind of structure at the near the zone low for already tested. See how many times it is tested here. So that's why even if you miss trade, nothing to worry about that or nothing to feel about that. We have a clear, very good, excellent drop base drop zone. If entry did not reach means you have to assume there is a huge, the strong, it indicates this zone is very strong. Just before entering the zone itself, there is a very good strong supply is there. So next time when prices are entering into this, definitely we have some confidence that this zone will hold and push the price down. This rejection is an early indication that there could be some strong supply just before the zone. That means the zone might be even more stronger. So these are all some important points we should observe. But otherwise, we didn't have any trade from these yesterday's high liquidity zones. Two demand zones are violated still. Okay, one zone is not yet to violate. Just kissed the distal line. The important point you should learn from this lesson is when a high liquidity zone can be violated. If you know that, you never take a trade in that zone. So now, this is about the analysis part. Now let us discuss, let us generate demand and supply zones for our daily time frame. So entry time frame is daily. Let us find the stocks which are near to the daily demand zone. So this is the filtered list, the many stocks near the daily demand zone. One point you should observe, this algorithm is very strict algorithm. Today such market is such a, what I mean to say, such a red market, that means a bearish market. Still, these demand zones might have been resisted. Price didn't reach because this algorithm is very strict. Maybe there could be a small percentage before the demand zone. That small percentage would have been crossed today when the market is such a bearish. Still these demand zones are holded means maybe there could be some good pending orders in this demand zone. This is just one clue because I developed the algorithm in such a way, stocks near demand zones, they came very close and they didn't get inside. Probably tomorrow they may get entry, but there is a possibility. If tomorrow also the market is very strong, what happens? Either some of these demand zones might be violated or price will go and close inside the demand zone. If they are close inside the demand zone, you have to wait for until the next day to reach our target. That means you may not get successful daily trades. But we never know. If the demand is strong, at least some extent during the intraday, it will push the price and that way it will reach our target. Later on again in the next supply push, our zone might be violated. That is also possible. There at least one entry we may get successful entry during the day trading. Anything might happen, but let's see, because we have a big list. Find the high liquidity zones from this list. If fresh high liquidity zones are there, give them top priority, especially S_DZ. If you find any fresh, this stock is Bata India, is a fresh zone, low on the curve, and odd enhancer score is 14. All these parameters are excellent. See the risk reward 1:17 1.17 to 9. Risk reward is excellent risk reward. And another thing, your monthly trend is up and weekly trend is also up. Only daily trend is down. Obviously, daily trend is down by the time prices reaches to low on the curve. So that is expected. So that means mostly from here it should turn back. ICICI Prudential is already tested once and gave 2 rejections. So you need to look for deep inside fresh zones. Indigo is already tested 3 times. If you find fresh 75-minute zones inside, you can give weightage to these high liquidity zones. Ramco Cement C underscore DZ. This is high on the curve. So you should look for only intraday trade only. They are quite danger. And moreover, S underscore DZ is having higher priority than C underscore DZ in daily time frame. In 75 monthly and quarterly, C underscore DZ is very powerful. But in daily time frame, S underscore DZ is powerful than C underscore DZ. But this is also one fresh zone. The only problem is high on the curve, and the positive thing is all the 3 trends are up. Monthly, weekly, daily, uptrend. Vedanta is also fresh zone, but completely it is in sideways market. In sideways, you have to look into the chart to understand how prices are moving in a sideways. Okay, this is about stocks near daily demand zone. Let's go back. For entry time frame daily, let us find the stocks near daily supply zone. So here again we have found 8 stocks. We have high liquidity zones, HCL Tech, IPCLF, but it is already pierced. But see how many rejections, 23 rejections. My God, this is from 2022. And next one is persistent. Previously, once we got a good trade in persistent. So again, it came to the supply zone. So that's it about the high liquidity supply zones. Now let us find the stocks inside daily demand zone and supply zone. Entry time frame is daily. Let us find the stocks which are closed inside the demand zone. So we have a very big list. Even Nifty next 50 is inside the demand zone. We have a very big list. So total 82 stocks are closed inside the demand zone. If all these demands are broken tomorrow, that's it. Market will be crashed. But we don't know what will happen. All these demands are having enough pending orders to push the market up. We don't know that. We have to wait and see. But there is a possibility 82 stocks in demand zone means something will happen definitely. Either market will go up or market will be broken if all these demand zones are broken. In such kind of demand, in such kind of markets, our decision making will be very tough. We can't take strong decisions that will affect our psychology part as well. Okay, let's go back. Let us, for a daily time frame, let us find the stocks which are closed inside daily supply zone. Only these 4 stocks are closed inside daily supply zone. Now let us find the tested zones. Obviously, more zones will be tested today because many stocks are closed inside demand zones. Entry time frame daily. Let us find daily tested zones. I mean daily tested demand zones. So as expected, many stocks are tested. So 67 stocks are tested. Let's go back. For entry time frame daily, let us find tested supply zones. So no supply zones are tested. Let's find newly created demand and supply zones. Newly created demand zones. I don't think any demand zones are created today. No, yeah, no demand zones. Let us find the newly created supply zones. Probably more supply zones might have been created today. Yes. Now the question is, all these supply zones are having the capability to break the demand zones, daily demand zones, where price closed inside the daily demand zones. So that's why tomorrow is a little cautious day. See, remember, when we have so many supplies are created and price is closed inside the demand zones, so all these supplies, if they break the demand zones, so market will go further down. Mostly the demand zones would have been tested demand zones, but the newly created supplies are already fresh supplies. But the only question is how strong these fresh supplies, we don't know. So 58 supply zones are there, created. So this is about the filtered list. Now let me generate demand and supply zones for all the stocks for your reference purpose. Entry time frame is daily. So I'll keep on scrolling this list. So wherever you want to refer, please pause the video. So this is the end of the list. I hope the information in this video is useful to you. Let's meet again in our next video. Thank you.